Thank you very much. Good morning. Inya mana, inya waka, inya reo, e rao rangatira ma, tena koutou katoa. So first of all, I want to say well done to the FSC for setting this up. This was obviously a very complex logistical exercise to get done, and I applaud you for continuing that through a lot of difficulty and organisation, so well done. So a year ago, I stood on an FSC platform and I had a good whinge at those parts of financial services that I felt were denying the need for change, that were clinging to attitudes and business models that had already caught fire in the UK and Australia, but had convinced themselves were appropriate and sustainable here in New Zealand. When I came in February, I said that having had my whinge and having seen the government commit to legislation for a new conduct framework across financial services, I hoped for a more constructive and collaborative year. So February seems a world away now, and we are, all of us, busy trying to see our way to a steady state. I fear it may be some way off. So industry and the regulators are dealing with an enormous amount of change in financial services regulation. The FMA is looking at the FSC changes for financial advice, obviously the COFI bill that you've just heard talked about. The Reserve Bank has bank capital, it has its insurance review, it has the Reserve Bank Act review. ComCom has the FSC review, and a whole host of other things I could add to that list. And on top of all of that, we've had COVID. So that's placed enormous strain on all players in this setup. I have been heartened and impressed by the nature of the response across the financial services sector. I want to pay tribute to those working in the industry who have endured difficult and stressful conditions but are still putting customers first. It's hard to know what this would have looked like a couple of years ago, before the Australian Royal Commission and the conduct and culture reviews that the FMA did with the Reserve Bank. But irrespective, this period has showed that many parts of the industry, advice, insurance, funds management, banking, have shifted gear when they've needed to. So I want to start by saying thank you to all of you for all of that hard work. So I'll talk just a little bit about what has changed over the last 7 or 8 months. Starting with markets, you don't need me to tell you that markets have been volatile. They've been pumped up by central bank stimulus and low interest rates. We saw the end of a long period of healthy returns and relative stability since the global financial crisis. Pre-COVID, equity markets were all-time highs. We saw a sharp correction in March and into April, but most equity markets are now back at all-time highs. Nonetheless, there remains considerable uncertainty in our markets. The impacts of COVID, Brexit, the US election, the US and China trade wars, all of these are still fully to be felt. And at some point, government and central bank stimulus has to come off, both here in New Zealand and elsewhere, and the economic and social impacts of that could be very painful. Turning to investors and savers, as we've heard this morning, Kiwisaver saw massive surge of interest and concern from Kiwisaver members, huge call volumes into providers. We saw increased switching, increased hardship withdrawals. Switching was something like 54% up on the prior year, most of that during the March period. But the industry and the regulators have been consistent in our message not to panic, not to try and time the market, and to stay the course. Most of the switching has been between funds rather than being between providers. Something like $1.5 billion has flowed from growth and balance funds into conservative and cash funds. We worry about people crystallizing losses by doing that, and we also worry about members who've switched out of growth funds into conservative funds and have not switched back and have therefore missed the rebound. For investors and savers, we think about interest rates and how they're going to be lower for longer. We think about the impact on term deposits, the impact on investor behavior and the search for yield. We worry about investors heading into speculative high-risk products and susceptibility to frauds or scams. It feels like about the right time for a surge into cryptocurrencies. Through Sharesies, Invest Now and Hatch, we've seen innovation taking hold in New Zealand's markets. We've seen a surge into direct equity and direct fund trading through those platforms, and they have all been strong net buyers and supporting the levels of our markets. These platforms are now significant players, and we expect that they are here to stay. For financial services providers, it's all been about customer care over this last period. It's been about understanding the pain points for those customers as they develop or emerge, and appreciating that quite often, by the time a bank or an insurer, for instance, realizes that a customer is in financial difficulty, they are probably deep in a hole. Generally speaking, not paying your mortgage or not paying your insurance is, for most people, one of the last shoes to drop, not the first. So from our perspective and other financial regulators, we are focused on looking after vulnerable customers, identifying when people move into a vulnerable state in their financial circumstances, and recognizing that during the coming period, we're going to see a lot more people getting into difficulty. This shows the value of direct interaction between financial services and providers and their customers. For the regulators over this last period, we've extended reporting periods to give corporates and licensed entities time to pull themselves together and do their required reporting. We've relaxed some of our regulatory requirements. We've deferred some of our intensive on-site supervision and monitoring. And we've taken great care over issuing detailed information requests to the industry, although it's fair to say that has not stopped entirely. And we have increased coordination between the FMA, the Reserve Bank, and ComCom. We are now moving carefully back into some of the activities that have been deferred, not least some of the routine monitoring activity in our supervision function and the follow-up on some of the things we saw in our conduct and culture reviews. So I'll finish by just saying a few words on what we hope to see going forward. We hope to see continued and relentless focus on operating in the interest of the customer. We want to see good practices and processes. We want to see efficient and accurate systems, controls and training around customer needs. We want to see a focus from the very top to the very bottom of organizations on the customer. And we want to see a culture woven through those entities and indeed the entire sector about customer needs. As I have said on FSC platforms and elsewhere repeatedly, we have no truck with the argument that if customers are disadvantaged accidentally, then all is forgiven. In most of the instances we have seen, we do not find evidence, generally speaking, of deliberate wrongdoing. But nonetheless, we will judge you for poor systems and poor practices that damage your customers, whether they have complained or not. I would add that the single most impactful piece of feedback from my on-site teams when we did the conduct and culture reviews with the Reserve Bank was that it was the frontline customer-facing sales teams who cared most about the customers they were serving and who were most frustrated with the misaligned incentives they had to operate under. It was comforting to hear that passion for the customer. I've heard from many CEs and boards that they care just as much, and during COVID we have seen direct evidence of that. So let's keep that commitment going, the commitment of resource, of time and of money to a good culture around the treatment of customers and a good organisational setup that will deliver that. So between now and when the COFI bill comes into effect, at the FMA we have committed and we continue to commit to work constructively and collaboratively with you all to set up that framework. There will be some hard yards, and all the more so given the difficult economic conditions that New Zealand is going to undergo. But as I said in February, we are moving in the right direction. And to finish, speaking for a moment on behalf of all the financial regulators, I'd like to say I am confident that our goals and interests are aligned, and that all New Zealanders will benefit from a strong and customer-focused financial services industry. Thank you.